Good morning and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by our guests. Before bringing them on board, let's see what the global handover looks like. Wall Street poised for weekly loss as key indices slip for a third straight day. Most of Asia also looking subdued with Kospi down over 1%. SGX Nifty hints at another day of weakness. European stocks closed lower as investors digested news from US Fed Reserve, Swiss Central Bank and Bank of England as they opted to hike rates. Stoxx 600 closed lower by 1.8% with major sectors and indices in the negative territory except banks and basic resources which were flat. Stocks on our radar today would be M&M, Hero MotoCorp, Bombay Dyeing, Cipla and Shilpa Medicare. We also speak to a seasoned market watcher on how Indian retail investors should read the macro cues and pick stocks amid uncertainties. Okay, to start the show, we're joined by Mr. Naveen Kulkarni of Axis Securities to talk about his investment mantra during market uncertainties. Naveen, thank you so much for taking time out and chatting with us today. First and foremost, I want to understand how retail investors should digest the macroeconomic data, growth forecasts, central bank rate revisions, all of that. How will it impact an Indian investor?
Essentially, what it means from investment community as a whole around the world is that, there is going to be liquidity which is going to get sucked out of the system, right? So, because what will happen is that when let's say powerful governments like the US will see a higher yield in their markets, essentially money will flow to those markets, right? So that's what is going to happen, that too in the fixed income instrument eventually. So it will mean a significant amount of liquidity getting sucked out of the system. That's point number one. Point number two, what it means from an equity investor point of view, it means that from a long-term perspective, valuations could get compressed, right? If the growth that we are looking at, if that does not materialize, then the valuations will get compressed, right? So this is the likely scenario. So the broader point here is that one has to be reasonably careful about what we are buying, where we are very, very confident about the earnings growth prospects and about the value of things. Unnecessary speculation is what will lead to big losses in this kind of a market, right? So my limited point here from retail investor point of view is that this is a market where stock picking, sector picking, having a view on the market is very, very critical. If we are not very sure about the earnings prospect or the growth prospects of a particular company, and we unnecessarily speculate without having sound fundamental basis, then the chances of losing money in the equity market is much, much higher in this kind of market, because this is a market where foreign institutional investors could sell, and they could sell at a higher pace also in the future, which will mean higher amount of liquidity getting sucked out of the system. So essentially, the chances of incurring losses in speculative bets is going to be extremely high. So that's the overall set that I would say will be for equity investors, especially the retail.
Okay. All right. What about our own, RBI MPC meet next week? What are we expecting from that, and from a market standpoint as well? Do you think the decoupling of Indian markets vis-a-vis global markets that all of us have been talking about, that will continue irrespective of what the RBI does next week?
See, if we look at, let's say, the way Indian markets have been panning out, the correlation has been very strong actually till date. And so the decoupling that we are talking about is essentially talking about the outperformance that we have seen in the Indian equity market. Right, so that's the point. So it's not that when the US markets are falling, we are rising by a big margin. Nothing of that sort is actually happening. Those markets are falling. Let's say they are falling by 10%, we are falling by 3%, right? So the direction is roughly the same for the markets. Having said that, what will happen next week? I think all the central banks around the world are acting in consortium, right, in some way or the other. We saw that Sweden raising interest rates by huge margin. Bank of England, of course, is raising. So everybody is raising interest rates. There is no, I think, option with regards to whether one can raise interest rates or not. Point is that India will also do the same. But the difference that India probably has compared to the global markets is that the unexpected inflation in India is not very, very high. So when we look at the US markets, 8% inflation was something which was unheard of, right, in the last 35, 40 years. Whereas in the Indian equity markets or in the Indian markets as a whole, the 7% inflation is something which we have seen, right, in the last decade or probably in the last 5 years also. There have been instances where we would have seen more than 5%, 6% inflation. So from that perspective alone, if I were to say that this is the kind of inflation that we have lived with and we will continue to live with. So that's not a big surprise to us. Having said that, probably we might have a interest rate hike, which will not probably be to the tune of 75 bips, which will to the tune might be in the range of around 35, 50 bips. So we'll probably have a slower rate hike from here because our interest rates are already high. So that's where we stand. And that's why we might continue to outperform also. But I won't say that we will be decoupled. Our correlation with the global markets continues to remain reasonably high. That's what I think will continue to be the case.
Okay. But what has been your stock picking philosophy and Axis Securities at large amid all that is going on in commodities, macro data, market momentum, or rather market volatility? Talk to us about how many of your funds have sort of managed to stay ahead of the market, and which themes do you like right now?
So we run our portfolio management services, our PMS products, with a very, very, I would say that very, very close monitoring of the macro variables, right? So we rely a lot on the quant-based models and top-down strategy, right? Which essentially we believe is something which accounts for at least 50% of the returns. Remaining for 50% of the returns, let's say, are generated by stock picking, right? So from our perspective, we are very, very much focused on the top-down approach, especially with regards to what investment styles will work, whether we should be looking at, let's say, growth at a reasonable price or value as a dominant framework, or should be looking at momentum as a strategy. So we look at these aspects very, very closely. We have our quant models where we have a scoring mechanism for all the stocks. And once we have decided this is the market regime that we are looking at, and essentially this is the kind of investment style, which is whether, let's say, a value or a growth at a reasonable price or value backed by quality, these are the investment styles which will do well. We pick stocks based on these kind of screeners where stocks tend to score high on these parameters, where we'll pick those stocks. So that's what essentially has helped us. More importantly, we have been very, very nimble in terms of assessing the market regime changes. So for example, by, let's say, May of this year, we were completely out of commodities, right? So we started picking more of companies which are consumers of commodity, which will benefit from lower commodity prices. So those kind of regime changes or sector rotation also we employ very, very rigorously in our portfolios, which has actually helped us in delivering good performance. So in a nutshell, what I would say that we value top-down approach as much as bottom-up stock picking. So our strategy is essentially based on both the factors, and that's what has essentially helped us in delivering almost a double-digit return in the last 1 year, in a market which has been largely a flattish kind of a market.
Okay, Naveen, great to get in your perspective and understand how your investment philosophy has been sort of panning out all these months. Thank you for joining in. Let's shift gears and talk about the technicals of the market. Nilesh Jain of Centrum joins us right now. Good morning, Nilesh. What is it that the cues are telling you? What kind of a trading session are we bracing ourselves for?
A very good morning to Karunya. No doubt there are some selling pressure we are witnessing in the global market, and that is what affecting us. And for the second consecutive session, we might see a consolidation. Yesterday, we have seen a smart recovery from the lower levels. So that clearly indicates our markets are showing resilience and every dip is getting bought into. But some sort of a consolidation cannot be ruled out looking at the global weakness. And few factors which are definitely affecting our market are rising dollar index and also rising US bond yield. So these are the couple of negative factors. So important support zone that is coming around 70,500. As long as we are trading above the same, there could be possibility of a buying coming in from the lower levels. The major undertone continues to remain on a positive side, and I still believe that every decline is a buying opportunity. We are trading above 50 DMA. We are also trading above 200-day major moving average that comes around 17,000. So from here for the day, I believe there could be some sort of a choppiness in the market. On the higher side, 17,800, and on the lower side, 70,500. So that could be 300-point trading range for the Nifty. The positive factor is that volatility index, which has cooled off yesterday to the levels of 18.8, and it is not able to surpass 20 levels. So as long as it trades below 20, we are very much in the comfort zone, and we are expecting less volatility.
Okay, all right. Let's also understand what some of the individual stocks are doing, and there's some news flow as well trickling in for many of these companies, which I want to flag off. First and foremost is Tata Steel. It's looking to amalgamate 7 group companies within itself. So Tata Steel Long Products, Tin Plate Company of India, Tata Metallics, TRF Limited, Indian Steel and Wire Products, Tata Steel Mining and S&T Mining Company. So all of these companies will be put under the larger umbrella of Tata Steel, making it a huge metals behemoth. Of course, it already is one, but it's going to become even larger, much larger actually. But talk to us about Tata Steel and many of these listed companies, whether it's TRF, Tin Plate, Tata Steel Long Products. How are they looking on the technicals, and what kind of a momentum should we expect on back of this update?
Well, Karunya, is extremely positive for all the Tata Group stocks, the name that you have already highlighted. So out of this, if you look at it technically, we have seen some consolidation in the Tata Steel stock, and apart from that, Tin Plate, Tata Steel Long Product, TRF, where we are continuously witnessing an upper circuit, and it is trading at 375 levels. So certainly, the news seems to be pricing in TRF stock particularly, and the overall structure looks positive for 400 plus kind of a target we can expect in TRF. And apart from that, Tata Steel Long Product, that is also looking positive. It has broken off from its falling channel, and recently in last 2 weeks we have witnessed huge amount of volume action as well. So 800 plus 850 kind of target one can definitely put in Tata Steel Long Product. And lastly, Tata Steel, that particular counter, even if you look at the overall metal space, we have witnessed some sort of a consolidation in last couple of weeks now, and important support is still placed at 100. On the upside, we can expect the momentum to continue towards 110 to 115. So overall, it looks like a good news for overall Tata stocks.
Yeah, looks like it. Let's see how the market and how these stocks rather react when the market opens. Moving on to some more, large cap names that I want to flag off. First one is Mahindra and Mahindra. They are in talks with global investors. They could be raising anywhere between $250 to $500 million to accelerate plans to build their EV ecosystem. This is, of course, something we're picking up from reports as of now. But even on back of that, if we look at M&M, especially in the backdrop of their Swaraj acquisition in just the week gone by, the stock has seen a fantastic up move of $70-75 just in 5-6 sessions. Of course, it's known to all of the people out there who've been tracking the market and who've been tracking M&M. What a phenomenal uptick it's seen all of this year. But can the recent upsurge that we've seen last 1 week, can it further mean more gains for the investors and for the company, the stock of the company?
Well, it looks like Mahindra and Mahindra is in a dream run. For the 7th consecutive month, we have seen the up move has continued. And so far in this month, we have seen a gain of 0.5%. But looking at the structure, which is looking very strong, and on the higher side, we can expect this further momentum to continue towards 1350 to 1400 as well. Although the risk and reward is definitely not favorable at current level from a positional perspective, but yes, it can be accumulated in a staggered manner, and the overall outlook continues to remain positive in Nifty Auto Index as well, which is trading near about 13,300. And earlier as well, we have highlighted that Nifty Auto could be the outperformer going forward ahead of the festive season, which is going to begin in the coming week and coming months. And the Nifty Auto Index, it looks like it is heading towards 13,800 to 14,500 kind of mark. So watch out for Auto Index on a positive side.
Okay, all right. The next name also that I want to highlight is from the auto universe, Hero MotoCorp. And they are saying that they're looking to raise prices of their motorcycles as well as scooters with immediate effect, and the quantum of price hike will be up to 1,000 rupees. Typically, given the input cost pressure when a company hikes prices, the market has sort of reacted positively to that because it will sort of help them ease the pressure on their financials. How's Hero MotoCorp looking? It has also seen a good run, but not as phenomenal as M&M's. But what's the future forecast from these levels?
Well, this particular stock has witnessed a lot of consolidation. We have no doubt seen a gradual recovery from the levels of 2200, but it's still trading below its previous all-time high levels. Way below previous all-time high levels, I would say. The stock is consolidating in a range of 2650 to 3000. But from current level, yes, the positive momentum may continue towards 3000. That could be the immediate target. But I think this particular counter can also be added from a positional perspective. The fundamental no doubt looks strong, and after rising the prices, it will have a positive impact there on the cash flows. And on the high side, once it breaks 3000 mark, we are likely to see the previous all-time high levels may get tested. So yes, it can be a good peak to accumulate at current level and on decline.
Okay. Moving on to some names from the broader markets, Bombay Dyeing is one name I want to flag off. They've received board nod to raise up to 940 crore rupees via rights issue. Now, Bombay Dyeing, if I look at the stock pattern, last 1 month around 5-6% uptick is what they've managed to sort of register. And last 5 days, the stock has seen extremely divergent moves. So is that divergence or is that volatility going to continue on the counter going forward?
If you look at the daily time frame chart, the stock has formed a double top sort of formation at 140 levels. And where exactly 140 is the level where we are witnessing continuous supply coming in. At the same time, it has a very good and very strong support near 85 to 90 zone. So it is stuck in a broader range of 85 to 140, but at current level, I think the risk and reward is favoring the bulls. And this particular counter can be added for the upside levels of 120 to 140 in a very near term, that can be the near term target. And as of now, on immediate basis, I think there is a lot of consolidation which is happening. The volume activities also started picking up, so that is slightly on a positive side.
Okay. All right, let's put the spotlight also on some pharma names. The first one is Cipla, which I want to highlight. They've received an establishment inspection report, an EIR, for its Indore plant, indicating closure of inspection. Now, this particular inspection was carried out at the plant from 27 June to 1st of July. US FDA had conducted this product-specific pre-approval inspection. So that's the nature of the audit or the inspection that was carried out in these dates. Talk to us about Cipla and how it's looking on the technicals. Last week, we had done a detailed chat on pharma, and most people we spoke to were quite optimistic about this particular name. Do you also concur with them?
Exactly, Karunya. If you look at overall Nifty Pharma basket, two specific counters that we are liking. One is definitely Cipla, followed by Sun Pharma. So if you look at the overall chart pattern of the Cipla, this particular counter has hit all-time high levels a day before yesterday of near about 1100 mark. And the major structures still indicate the momentum is likely to continue towards 1200 plus kind of levels in the very near term. And positionally as well, we believe that one can expect a CAGR of near about 15 to 20% in Cipla. So no doubt current level, we may see some profit booking, but once we see the levels of 1000 or near about 1020, that could be a good entry point. So wait for some sort of profit taking from the high levels for to make a fresh entry. The major support is placed at 990 levels, and the upside is open for 1100 to 1300 sort of levels.
All right. Okay. From Cipla, let's move on to Shilpa as well. Shilpa Medicare. Their analytical services division in Telangana has received an EIR once again from the US FDA. Now, this is the first ever US FDA inspection that has happened in this Telangana facility. They've conducted this inspection between April 26th to 29th. Talk to us about Shilpa. Are you equally optimistic here? Because like many pharma peers, this one also has seen a decent recovery in the last couple of weeks.
No doubt recovery has seen, but the major trend continues to remain on a negative side, because after hitting the highs of 640, the counter has continuously witnessed a gradual decline, and it is in the formation of a lower top and low bottom. So the moment it takes out 420, that particular level, one can make a fresh entry on the long side. But as of now, it is better to avoid creating any fresh long position, because we have a very good option in the pharma space, as we have already highlighted a couple of them. But this particular counter, if somebody is already holding the long position, one can keep a stop loss below 360 and can remain long for the upside levels of 420. I would be more comfortable if it breaks above 412.
Okay, all right. Let's quickly address some viewer queries as well while we have time. The first question is from Akshay, and he wants you to comment on Boral Renewables for the next 1 to 2 years, considering the solar power growth. Very strong 12-13% up move we've seen on this counter in the last 3-4 weeks. Even MC Pro had come out with a note just 2 days back about Boral Renewables, stating how it is a great opportunity for the long-term investor. But talk to us about the technical standpoint, Nilesh. Do you agree that one should enter Boral at the current levels, or should they wait for some cool-off?
We have seen a strong momentum a couple of years back, and then in last 1 year, what happened is that we have seen a time-wise as well as price-wise correction. So that is certainly a positive sign. A healthy structure has been seen. Overall, we have seen consolidation in the range of 500 to near about 750-800 zone. At current level, I think it's a good opportunity to make a fresh entry going forward. With a time horizon of more than 1 year, it's a good bet. On the higher side, we can expect the levels of 800 maybe in 2-3 months, and positionally 1 year plus the time horizon, I think 1,000 could be the target that one can definitely eye on.
Okay. The next question is from Michael. He wants your advice on ICICI Bank. Good momentum seen there, almost 450-500 bucks added on the upside last 3 months. Is the run rate going to continue?
Well, the momentum is positive. There is no doubt about it. But looking at the overall Bank Nifty as an index, we might see some sort of a selling pressure, considering the fact that we have already witnessed a good amount of rally. If we talk about ICICI Bank, which is extremely highly volatile counter, and I think if somebody is looking for a fresh entry in the private sector bank, I would like to go with ICICI Bank or maybe Axis Bank, because there we may see some sort of a stability. Whereas ICICI Bank, if somebody is already holding, then one can definitely remain long side. It is no doubt trading above all the short-term and long-term moving averages, but the support now comes around 1150. So that should be the stop loss, and the upside is open for 1250 to 1300.
Okay. All right. I want to also bring up Naveen's question. This is on KPIT Tech. He wants your advice there. Good, very interesting journey it has been last 1 month for KPIT, from 560 levels to 660 and upward, actually. Talk to us about the way forward.
Extremely positive setup can be seen, 18% up this month so far, and a big rounding bottom is shaping up. So if you are already holding, then continue to remain on the long side for the upside target of 750 to 800. The overall structure looks positive, and it is likely to hit all-time high level. In fact, if you look at yesterday, in spite of the weakness in the market and also in IT space, this particular counter was the outperformer. So I think, yes, on decline, it can be bought with a stop loss below 600, and if somebody is already holding the long position, can continue to ride this rally for the upside target of 750 to 800.
Okay, all right. I just want to flag off to all our viewers who are asking us questions on Tata Steel. You can go back in the feed a few minutes, and we've already addressed the stock in detail and the news as well that follows. So please check it out there in our YouTube feed. But before we let you go, Nilesh, want to know your preferred picks in the market right now.
Right. So we spoke about the auto space, where we have been bullish in last couple of months, and we continue to remain bullish for next 2 to 3 months as well. So we are liking Maruti. We have already spoken about M&M and also Hero Moto. I think Maruti, which is trading at all-time high levels, near all-time high levels, the upside target that comes around 10,000. So I think it's the time that it is likely to test the 10,000 figure. Stop loss should be placed at 9040. At current level, the risk and reward is not that much favorable. So wait for a decline we might see in today's trading session, looking at the weak global cues. So if at all we see levels of 9300 to 9200, that could be a good entry point for the upside target of 10,000. So that's the first stock that we are liking, and the second space that we are liking in FMCG. So FMCG space, for the third consecutive session, we have seen an outperformance in the counters like HUL, Dabur, Marico. So out of these, we are liking Dabur specifically, positively. This particular counter has broken off from its falling trend line, and volume and price action was seen yesterday, and a good momentum and a good build up on the long side we have seen yesterday. So Dabur looks positive as a positional bet as well as from a short term perspective. The target is intact of 601. Stop loss should be placed at 562. If somebody is looking out for a positional bet in this particular space, I think the target should be 650 to 700.
Okay, all right. So 2 buy calls, both consumer-centric names, Maruti as well as Dabur. On that note, Nilesh, thank you once again for joining in and sharing with us your view on the markets and several stocks on the radar. With that, we're going to wrap it up right here on Morning Trade. Thank you so much for tuning in.